This guy got the oil country's ice hockey team to publicly work on their climate contribution. And they literally have Oilers in their name. Their app was downloaded over 17,000 times in the first year. This isn't the story of some Ivy League grad. This is the story of a trucker who turned his frustration into action, while at the same time having a big impact on the climate. Ted Clovis starts with a single vehicle and in just a few years builds into a fleet of 100+ trucks, eventually selling it in a multi-million deal to a major energy logistics firm, where he becomes the manager of Northern Operations. It is the kind of success story every entrepreneur dreams of. But success comes with a cost. His trucks burn millions of liters of fuel. Wanting to do the right thing, Clovis suggests balancing the fleet emissions. Instead, he gets left off and told that balancing emissions is for corporation publishing ESG reports, not for a trucker trying to balance his fuel bill. That experience becomes his turning point. He even tries to purchase carbon credits on his own, only to discover the system isn't built for businesses like his. The problem isn't the fleet, it's the entire market. So he gives up his well-paid position and with the proceeds builds the company he searches for all along, Karbon-X. Karbon-X launches with one mission: to make high-integrity, science-backed carbon credits accessible to all. The exact solution he misses when he tries to balance the emissions of his own fleet of trucks. And the results come fast. In just 2 years on the OTC markets, Karbon-X grows revenue from under 10,000 to over 1.6 million, a 160-fold increase. Annual revenue reported for the year ended in 2025 shows revenues of 3.1 million. Growth keeps at high speed. Partnerships with firms like DevvStream deliver 7-figure contracts. And today, the company manages a portfolio of large-scale reforestation, mangrove restoration, renewable energy, and emerging technologies. But Karbon-X doesn't stop there. In 2025, it makes another bold move, acquiring Allcot, one of the world's most experienced climate project developers and climate consultants guiding communities, companies, and even governments worldwide on their goals. That deal instantly expands Karbon-X's global reach, adding decades of project experience and credibility on a scale few companies in the space can claim. Brands love that approach and get involved. The Karbon-X Dukes, an Austrian baseball team, and the Edmonton Oilers, the ones we just saw the jersey before, and people like Brett Hull.
Oates gives it in front to Hull, a shoot, he scores! And Hull becomes only the
one of the most famous ice hockey players ever.
Karbon-X announces appointment of Brett Hull and Justin Bourque to its board of directors.
That's an incredible story. But is it something you can actually make money with, build a business around? For this, we first have to understand the basics of the carbon markets itself. In a nutshell, the EU's emission trading system, or ETS, creates a financial incentive for the biggest emitters to cut back. How? Well, since 2005, the ETS has set a cap on the total amount of greenhouse gases companies can emit each year and requires monitoring of these emissions. A fixed number of allowances, which are the currency of the carbon market, are issued, and each year companies hold enough allowances to cover their emissions or face significant fines. Don't have enough? Cut your emissions or buy extra allowances from another emitter. Have extra allowances? Keep them for the next year or sell them. This flexibility ensures that emissions are cut where it costs the least to do so. Over time, the cap is reduced. Fewer allowances are issued, techniques to cut emissions are developed, and total emissions drop. Companies have a financial incentive to cut their emission or pay others to do so. But there's many industries that are not yet covered by the EU ETS. Lots of companies seek to reduce emissions anyways, either because investors are asking for it or other stakeholders require it. Or maybe they just see it as an increased brand value, meaning that they can charge higher prices than their competitors because of their positive impact on the world. An example for this is German shipping giant DHL.
In 2020, our carbon footprint was more than 33 million tons of CO2, but we're aiming for zero emissions by 2050.
They set a big goal for themselves, but there are many emissions that they just cannot cut with current technology, or these improvements are simply too expensive. To cut back on those emissions, there's the so-called voluntary carbon market, VCM. There they can go and buy climate contributions that reduce their footprint. The supply side of that market is provided by companies like Karbon-X, companies that are developing projects that lower CO2 emissions. Those CO2 emissions are measured in credits. Projects generate credits in two ways, either by preventing emissions or by removing carbon already in the air. For every ton of CO2 avoided or removed, a project issues 1 carbon credit. When a company buys and retires that credit, it counts as offsetting 1 ton of their own emissions. Independent standards verify these projects, making sure the impact is real and measurable. Then, brokers and exchanges connect supply with demand, turning carbon impact into a tradable asset. This is the ecosystem companies like Karbon-X operate in. A voluntary market built on trust, verification, and the flow of credits between those who emit and those who remove. Short disclaimer, I'm Andy. Here I'm just sharing my personal insights on early stage investments. Nothing what I'm saying here is financial advice or something. Stock investment is risky. You can lose everything, especially in early stage company. This is what I'm personally most interested in, because this is where you can get the huge payoffs. But please don't rely on me. Do your own research. And I'm compensated for doing this video. I'm doing this together with the MK Investment Conference. I'm not paid by the company itself. I think you should still know that. And I personally own shares in this company, so I'm kind of excited to see how it plays out in the future. Let's get back to the video. Now that we've understood how those markets work, we can actually understand how Karbon-X makes money, how they actually have a business with operations. Let's check out their business model. So Karbon-X makes money in different ways. They do the EU ETS trading that we just understood. There, obviously, you try to buy cheaper and you sell higher. Typical trading business. And it's pretty hard to get access there. But you can also get projects actually developed that help companies to reduce their footprint. They also do the VCM trading. You buy lower and you sell higher. And they also do the part before in the value creation, where the credits are actually being created. So they are actually running the project itself that have the positive impact on climate. Alone, their newest acquisition, Allcot, sold more than 50 million carbon credits in those markets. And 30% of that came from projects that they developed themselves. But who's exactly their customers? So they have different sales channels. So the first sales channel is business to consumer, people like you and me. And then there's business to business, where they are helping other companies to have climate contributions to reduce their footprint. For the B2C market, they built an application that allows easy access for people and families to buy climate contribution and reduce the footprint of their lifestyle.
We got 25 people going, and when the web app comes out to their direct app, I see a large uptick. The last year has been amazing. We've ran the app from 0 to over 17,000 downloads.
Including me.
Including Mel. And that's in less than 8 months. So in 8 months, we have 17,000 downloads, which is more than a lot of apps ever get.
But the really interesting part is the B2B side. We heard about those awesome partnerships that they have with, for example, the Karbon-X Dukes, the Austrian baseball team, or the Edmonton Oilers. Everybody who loves NHL knows and how kind of big deal that is. But they have many other clients that are not public. So they're actually providing service to Fortune 500 companies.
The Fortune 500 is the iconic list of large companies in this country. When you've made the Fortune 500, you know you've made the big time.
This really demonstrates that Karbon-X is able to pass through the big due diligence that those big companies do before they enter any commercial agreements with other companies. But let's dive a bit deeper on how they make money with that. For this, I talked to Chad Clovis, the CEO of the company. Okay, cool. How do you make money in the different business lines?
Different business lines, fairly simple. So the fact that we acquired Allcot now brought 7 projects into the fold. So those projects are already funded, 95% built, and we have the last 5% of work left to do. They issue carbon certificates in different models, CORSIA certificates, Article 6, Article 6.4, and just voluntary. We have Chilean offsets and Colombian offsets that both are in compliance. So the project side, you invest money, the money is deployed, the deployment allows you to build the credits, the offsets go to the trading team sells them. So that's one aspect. Second aspect is taking positions in compliance trading. We just recently closed a $10 million investment into the company. Half of that is being used to buy compliance instruments at a downturn, and then it's the team's responsibility to sell them on the upcycle. Example of that is we just did a deal in British Columbia for an OBPS trade. We made about 40% margin. Can't go into the exact terms, but it was a very interesting one. We deployed $3 million, made 40 on that, which is perfect. And then the last aspect of it is more revenue based on consulting on projects, showing companies how to build projects, drafting design, drafting contracts, drafting projects, building feasibility studies, those whole kind of works.
And for the regulated market, how do you make money there?
The compliance market's the best one alive. So the compliance market, we are legal to trade in Chile, Colombia, Mexico, BC, which is British Columbia, Alberta, California, and Quebec. And then we're also allowed to trade in the EU ETS. We just got qualified in the UK as well a couple days ago, but we haven't done any trades. So in the European Union, we've sold EUAs, IRX, GEOs, Tigers. Over in Canada, OBPS, kits, tier. And the way we complete those trades is either getting lucky and being able to meet a project developer who needs a way to trade their credits and we have the experience to trade it, or we'll meet a project developer who doesn't know how to develop the project, we'll invest in it, and then we'll own a portion of the project, sell our credits, and give them the opportunity to sell theirs.
And you get paid for being able to trade there? Like, is it a commission business, or do you own a position by yourself? Like, is it fixed fee percentage that you get for the trading, or do you basically have exposure and you're like a market maker?
Both. So our project in California with the one hockey team, we generate the certificates from their equipment. They never knew how to generate them. So we generate the certificates and we have the actual certificate. So that one there, we know what our margin's going to be because we know what our cost is going to be. In Alberta, the last 7 trades we did, a very large company couldn't make the trades because the companies couldn't qualify KYC. They were too small. We just take a spread. So we took a spread on the total trade, got paid our margin, no exposure, no risk, 24-hour turnaround.
Okay, so it depends on the project, how it's structured. We've seen that crazy revenue growth that I showed in the very beginning, like the 160-fold. This was all due to like projects and the carbon climate contributions, the carbon credits that they issued. I don't really see any reason why this growth shouldn't continue. They just had a press release where they announced that they finally opened their EU ETS trading account, which is a market with big potential too, and therefore I'm kind of bullish that we're going to see the same kind of growth rates that we've had in the past so far.
So in carbon, we did what people couldn't do so far. So most people in carbon haven't been able to make meaningful revenue. So this quarter, we're not allowed to disclose what it is, but October 15th, it comes out. But the thing we can disclose is we forecasted 44 million for this year, and we had to adjust our forecast September 15th to 118 million.
Before I recorded this, I didn't have any updates on that. So, I mean, that is obviously good to hear. Let's look more into the people who are executing in this speed. In the beginning, we've heard the backstory of Chad, who I'm talking to you as well in this video. He's definitely a huge force driven by a personal mission and definitely well connected through all the past businesses that he did and his connections with the oil and gas sector. He's really a man of action. And with him, he now got a new guy, a person who's really experienced in scaling businesses, and his name is James Callahan. James has proven multiple times that he really understands clients' needs and how to build a proper system and team that can help clients to fix their problems. He started out as a top performer sales guy himself, then proved he can multiply his expertise by training staff, building up all the tech and the solutions that you need in order to help a lot of businesses, and yeah, more than you can just do as a single sales guy.
James Cahalan, yeah, he was an oil and gas sales guy for probably 20 years. 3 or 4 years ago, he flipped to doing environmental sales. He was with Bumitra. Bumitra is a very big soil carbon company, good group of guys, had some issues with some funding, and James just wasn't enjoying himself, so he actually asked to come work for us, and we gave him a test, and he passed it. Walked in. He's got beautiful relationships with British Airways and Singapore, all through the US, lots of compliance experience, and kind of rounded us out in the team aspect for managing the team. He implemented a CRM system that works. The pipeline's massive. Actually, it's a lot bigger than I thought it could ever be. And now it's allowing us to kind of execute professionally versus just all on me. It's kind of spread it all out.
So he's responsible for building the whole pipeline of projects. What are you doing?
Yeah, the whole revenue cycle. So he's got a pretty big shelf. He's looking after the full revenue cycle. So he sources projects with Monica. He makes sure the trading team is activating correctly in all 5 compliance areas and voluntary. And then he also commissions and closes the trades for me to sign off on.
And at the same time, when they are building all of those projects, they are having a big impact on a local basis as well.
We're employing a little over 500 people in West Africa right now, planting mangroves in Senegal and Guinea. So that's super interesting, being able to support that many families, that many different groups of people.
To achieve all of those great numbers that we've heard so far, they have been involved in 215 plus projects, and they opened more than 9 offices all around the globe. Let's look at exactly what they have achieved so far and what are they up to in the future. How do you see the outlook on the overall market? What are the drivers that are going to affect the overall volume, market size, and margins?
Yeah, the number one thing in our industry is we need to consolidate. So we started that by acquiring Allcot. We have a plan of acquiring another 4 companies in the next 2 years. If you don't consolidate the carbon market, there's never going to be a price consistency. So right now you get people that say we have the best project in the world. It's transparent. It's clean. We support third-party individual companies like NGOs and whatnot. And we employ lots of people in areas that don't have employment. Great. Every project says the same thing. They all say the same thing. The one thing they don't talk about is we're going to make financial returns. We're going to make money. We're going to operate a business. So that's kind of what we said. Okay, well, we're going to operate a business first, because if we operate a successful business, then we can support the communities. We can support the country. We can support the people. But we can't do that if we don't have a business. So the actual carbon economy is built off of the mindset of saving the world. And that's great. But you can only save the world if you have a business to do the work through. So we're going to consolidate the market, hopefully by about 8% is what we're going to shoot for over the next 5 to 10 years. We would like to have an 8 to 10% market share of the whole carbon market. Once you have that kind of a market share, you can control the price metrics a little bit. If you have 4 or 5 groups together, speaking together, working on the same line, you can stabilize it and take the humpiness out of the pricing. Last week, I seen ARR, which are tree planting credits, go from $2 to $15. So the spread is so far. How do you build a project with a financial model where you know you're going to be successful? You can't. And that's because our market is so spread out and disruptive.
Yeah, because of the volatility of the prices, you don't have kind of security on your finances, and with that makes actually that insecurity makes a lot of projects infeasible.
Yep, 100%.
Yeah, what's your overall goal where you want to come with the company? Like, what's your vision for it?
The vision is to get to a major market, London, New York. On the public listing, we're on the OTCQX now, but we want to go to the major market fast. We got accelerated paths to both. We want to complete a very large capital round that will allow us to do our consolidation of the carbon market. And then the long-term goal is to develop this into something that can be remodeled into the same aspect with 4 or 5 different groups.
Okay, so any milestones that you've set to actually get there, like a certain amount of projects, certain amount of acquisitions?
Yeah, so we're 4 acquisitions in the next 24 months is our goal. Out of those 4, we want 1 to be a major acquisition. So we're fine doing 3 of the kind of smaller ones like we just did with Allcot, but we do want to set our sights on somebody who's a little bit bigger. We have 2 or 3 targets in mind. I know they're all going to be raising capital. I think we have a shot to do it. So those are the 4 kind of acquisition points. The other part is we want to raise $50 million in our next capital round, $100 million follow-on. And we want to keep driving the revenue up, solving our working capital issue to increase our EBITDA margin. EBITDA now, about 11%. Once we solve working capital and we don't have to borrow money from banks to do trades, EBITDA is 21%. And that's a very, very good margin. Forecast this year, $119 million. I believe I'll beat it January, February. Next year's revenue, we're forecasting $238 million. If we can do 20%, that's a business.
Yeah, then you get the fixed costs back in, right? Then you actually would be profitable and cash flow positive.
Yeah, so we're actually cash flow positive this quarter. So it'll be coming out October 15th. We'll announce we're positive. We'll announce what our revenue was. Next quarter, we should be positive again. And then the quarter after that, we're shooting for profitability. We'd be profitable today, except, like I said, we did a pile of trades. We haven't raised a lot of money. We literally are pretty tight in our cap table.
What are we going to see over in the next quarters? Important milestones.
Next quarter's October 15th will be the big one. We're going to have a revenue announcement that changes everything we have. Right after that, the next quarter that comes out will be another revenue milestone, but it should also be a either cash flow super positive or profitability engaged by then. November, we'll be announcing our capital round, who's leading it. It's going to be super interesting. We have a giant bank leading it, and we have 3 banks signed on to be secondaries. So we should have 4 banks doing our 50 and then 100 follow-on. And then we'll be expanding from that piece into next year. So we do the 100 million, couple acquisitions, and then target the major.
You know what I looked at? I looked at DevvStream's IPO, and I think they were valued at, 16 times expected revenue.
Yeah.
So that was their valuation on expected revenue. Yeah. And then when I look at even, what was the last revenue number in the financials for Karbon-X?
So our last one was 3.7 million with 5.1 deferred. So we did about 9 million last year.
Okay, yeah. I mean, that's what I looked at, and this is like real revenue, not expected revenue. Yeah, it's like real. That was the best comparison that I could find. And
same with me. Yeah, so like when we listed on the OTCQX, they said, okay, let's do it 12 to 16 times. I said no. So we actually did 6.2. Off of expected is what we listed on the QX with. And now our expected has changed and our realized has changed, where we're in, like today, we're high 8 figures of real revenue already in the last 4 months. If we beat the 118, 119, that's real revenue. No prepays, no nothing. It's real revenue. If we bump ourselves up to a 12 times, maybe there's a $600, $700 million listing, but we just don't know yet.
I tried to look for what did other people already, like what did investors actually pay for this stuff? Yep. And then when I saw 16x expected revenue, then I was like, I looked at Karbon-X, got like actual revenue, not expected, then I was kind of happy.
Oh yeah. If we can get a 12 to 16, it could be shocking.
I mean, for me, I'm really, really happy with that milestone. Like when listing is done, I'm personally invested in that, so I got a huge interest in that. Yeah. What is the path afterward then? What's then the interesting upside for people that get in later at the point in time and not already are invested?
Yeah, people coming in now, we're probably 15 to 20 times we got left to go is what I'm seeing. Over the short term, the next 90 days, we're probably an 8 to 10 bag holder in the next 90 to 180 days. Long term, I have a plan, and I've said it for 3 years. We're going to become the consolidator of carbon. We're going to bring companies into us, and we're going to break the $1 billion market cap. And with everything we have in place, if we hit the 120 million revenue and I get it 12 times, we did that. So that's something that's super exciting. It's not something we talk about a lot, but it's going, okay, this is actually happening. So if it's happening now that we've proven the model, we've proven what we can do, now you talk about it. So now that we proved it, we didn't say we're going to try and do this. That was 3 years ago. Now we proved it. So now that we proved it, we start the path of showing people what we did. And yeah, October 15th will be the day to start that. The big revenue announcement comes out, lots of fanfare around that one, and then we start the push. So that's what I think. I think people that get in within the next 90 days probably make a very quick return. People that get in now hold for a while. I feel like there's a 15 to 20 times return in this. And that's just how I feel about it. Would I be happy with 12? Yes. So would Andy.
Yeah, well, I mean, I was happy with anything after seeing like what investors already paid for it. But there's also a clear path for the further growth. I mean, you've proven so far that you're able to start consolidating. You did that with the last acquisition, and I think that's a good start. And looking forward to see the further journey in that.
Oh yeah, no, it's going to be a lot of fun.
Awesome.
Yeah,
very good. Yeah, it's really, really exciting times ahead for this. I mean, Karbon-X is currently valued at, I think, a 50 million market cap, and they're trading at a 16 times sales multiple. Like, this is actual sales. If investors are still willing to pay a 16x multiple on expected revenue, like they, for example, did in the DevvStream IPO, and we're getting into the hundreds of millions of revenue soon, or over the next few years with Karbon-X, as we're actually expecting to get, then this is really, really exciting times ahead. For me personally, I mean, I'm still dealing with kind of low ticket sizes. So for me personally, this is not gonna be like life-changing money, but this is an opportunity that I think really can be for some people that are early in that.